Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention another fine folks, to the Sunday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to meander through this upside-down, topsy-turvy world we find ourselves in, to greener pastures on the other side, hopefully coming out healthier, wealthier, and wiser. It's Sunday, so we'll take a look at earnings that we can expect coming up this week, as well as a couple of little things in the market, just to see where the stock market's at. Of course, we'll check the cryptocurrencies and all of that. Got a couple of interesting articles here on China. Seems that users are using cryptocurrency to take flight of their wealth outside of the People's Republic. And we've got the dot-com survivors give their verdict on the current tech boom. We're also going to take a look at the market and continue to see how frothy it certainly is. And we'll take a look at how wealthy Jerome Powell is, which is certainly a conflict of interest, as we'll see. And these are the jokesters and banksters that are in charge of this great inequality growth. They're actually stealing from us with the inflation. And we'll have a look at that from our good friend Sven Heinrich. Okay, so from Bloomberg, dot-com survivors give their verdict on the current tech boom. Asset managers, analysts offer views on record stock rally. Mega caps look pricey, but, quote, you'll never replicate late 1990s, end quote. So a lot of people are looking at this particular stock rally at the moment, especially because it's NASDAQ heavy, and taking a look back at history to the 1999-2000 tech bubble burst and seeing if there's a correlation. There's mixed messages here, but let's have a look, see what folks say. This is Ryan Jacob, who started a successful fund back during that time, allegedly. The only people who say yes, it's like the 1990s, are hedge fund managers who are net short and annoyed, Jacob said by phone from Los Angeles. To say it's like the late 1990s, they have no idea. Now, perhaps we're just splitting hairs here, but it's clearly not like the 1990s. It's different. But as a bubble, it's probably worse, in my opinion. You can have a look here. This is the NASDAQ 100 has surged far beyond its dot level peak. I mean, this is dot-com peak level. This is certainly hyperbolic, in my opinion. It's even higher angles here than we saw in the 1999-2000 bubble, right? I mean, look at this. This correction here looks like it was nothing. Basically just a springboard from which it's a shot up again. Honestly, I think NASDAQ 100 should be probably at around 4,000 level, if not lower currently, but we'll see what happens. The NASDAQ 100 index is at a record while retail trading is booming. The priciest stocks, mostly technology companies, are at the steepest premium ever. Tesla Incorporated is trading at more than 800 times earnings. Tesla is just astonishing. That's going to be a huge comeuppance when that stock crashes, if it ever does. I mean, at this point, who knows what's going to happen? But I'm not playing in this market, that's for sure. This may not be the dot-com bubble, as Jacob says, but that doesn't necessarily mean it's no bubble at all. Scott Barbie started the opposite kind of fund to Jacob in 1998. Barbie is a value investor. You have very high valuations on certain adrenaline-type stocks where fundamentals certainly look questionable, said Barbie. Speaking on behalf of Captain Obvious, obviously. His worry is that much of this growth has already been priced into the likes of Facebook Incorporated, Amazon.com, and Apple. So as you can see, they're talking about here is that these companies have done well during this pandemic, so they're allegedly worth that, but I disagree as well. I mean, look at this signs of a bubble. Growth stocks are trading at the widest premium since the dot-com era. Just amazing. I mean, all the signs point to a hyperbubble, and yet it continues to go up. But of course, these are the things in the market, as they say. As Keynes said, the market can stay irrational longer than you can stay solvent. So I'm just on the sidelines, putting all my savings that I can squirrel away into Bitcoin and cryptocurrency. Because I don't see anything else other than perhaps precious metals, gold and silver, as being a good play for saving your money or storing your wealth, if you will. I think Bitcoin and probably cryptocurrency is probably the best of those. I mean, real estate's in a bubble, stock markets are outrageously bubbled, the bonds in a bubble. There's very little left where you can get a relatively safe, valued investing return. Today, at least for the big companies, the long-term profits have arrived, said New York-based Quincy. I would be surprised if there was a similarly spectacular decline, but the market's leadership could change. So he's saying, yeah, well, maybe have a little rotation, but that's about it. I think a lot of these folks are not going to age well with their comments. The number of domestic US stocks has nearly halved from its 1998 peak to about 3,700 today. So we're having a concentration in the stock market of a smaller number of companies. At the height of the dot-com bubble, the median age of a firm going public was 5 years old. It's been double that for most of the past decade. And so because of that, the net debt to earnings ratio of just slightly above 1 in the Russell 3000 compares to about 2.3 at the end of 1999. But a lot of these companies haven't hit the markets yet, and a lot of those companies are overburdened with debt, even the ones currently, I would argue. Around the time firms found themselves hurriedly removing .com from their names, the Federal Reserve was raising rates. Now borrowing costs are nearly zero and look likely to stay there for a while. So there you have it, folks, something to think about. There's obviously an argument can be made that a lot of people think that this is just a continued bull market rally now, and there's nothing to worry about, nothing to see here, carry on, business as usual. While the world is burning, the United States is particularly, and you have almost 30 million people with continuing jobless claims. This is a bifurcation of society is what's happening, the disconnect between the wealthy and the rest of us. I was reading somewhere that the wealth inequality in the United States has not been as bad in the history of the world, I think, until you look back to the French Revolution, just prior to the French Revolution, and you remember what happened then, right? So it's this kind of wealth disparity does not create a politically stable environment. I'll just put it like that. Report finds $50 billion of cryptocurrency moved out of China, hinting at capital flight against Beijing rules. Over $50 billion of cryptocurrency moved from China-based digital wallets to other parts of the world in the last year, according to a report by Chainalysis. Chinese citizens are only allowed to buy up to $50,000 of foreign currency a year at a financial institution. The report said that this could point towards the possibility of Chinese citizens using cryptocurrency to move their money out of the country. I don't think there's any possibility about that. I think that's exactly what they're doing. Perhaps not all of it, but I'm certainly believe that a lot of them are spending their money by putting it into cryptocurrency assets and sending it outside. In total, over $18 billion worth of Tether, which is a stable coin, has moved from East Asia addresses to those based in other regions over the last 12 months. Again, it's highly unlikely that all of this is capital flight, Chainalysis said. Yeah, but I'm sure a lot of it is, if not most of it. Part of this activity can be explained by China-based miners converting their newly minted coins into Tether and sending them to exchanges abroad, Chainalysis said. But isn't that basically sending your money outside of the country? I mean, if you were converting your newly minted coins, why wouldn't you just convert them into yuan or renminbi, right? Which are the Chinese currencies. So obviously they don't believe it. They're sending them abroad. So this doesn't hold water, in my opinion, regardless of this activity being explained as Chinese-based miners converting their newly minted coins into Tether and sending them to exchanges abroad. I mean, that might be a fact. But how does that dissuade from the argument that this is not sending your money out of the country as a flight of safety? It's exactly the same thing, just a different way of doing it, right? The report also found significant spikes in Tether movement on certain news events. Firstly, in October, Chinese President Xi Jinping threw his backing behind blockchain, the technology that underpins many digital coins. Secondly, after a massive sell-off in mid-March, the price of Bitcoin began to recover. So folks are turning to cryptocurrencies, obviously, even in China, which I think is a relatively stable currency at the moment. But certainly you've seen this a lot in South America, Venezuela, places like that. And it's only going to increase, in my opinion. All right, and here's the reality check from the Northman trader, Sven Henrik. This week, the headlines declared the bear market over as the S&P 500 joined the Nasdaq to make new all-time highs. These indices have made new all-time highs as 6 to 7 stocks are experiencing the largest and most aggressive market cap expansion in human history, distorting everything. Check this out. The market cap of just 7 stocks now equals 39% of US GDP. The balance sheet of the US Fed now equals 36% of US GDP. There is no free market anymore. There is no real economy either, as we can tell. The first top 5 stocks now represent 25% of the S&P 500, a concentration in weighting we've not seen since 2000, and we know what happened then, right? Just on Friday, Apple added over $100 billion in market cap out of thin air on no fundamentally driven news. So, I mean, clearly this can't carry on, right? If Apple adds $100 billion in market cap in one day, and that was just on one day, then in 10 days there'll be a $3 trillion market cap company. I mean, see how ridiculous this is. We live in a farce, really. This is becoming farcical, the whole thing. Here's another one. 1 year ago, in August 2019, Tesla was trading as low as $211. Now it's trading north of 2,000, a 10x return in 1 year. I mean, for a company that just barely made a profit. And most of that, as I understand it, was from selling clean air credits or whatever they're called. None of these companies have produced results that justify these historic market cap expansions in such a short period of time, but they provide cover for the illusion that the bear market is over and that a new bull market has begun. I call it an historic bubble, but don't let anyone tell you the market is in a bull market. And here he talks about while the index made new highs, as you can see in the bottom here, the XVG, which is up here, the equal weighted SPY or S&P 500, produced lower highs versus June and remains far below the 2020 highs or the 2018 highs for that matter. You can see here lower highs since June, lower highs since 2020 and 2018. It's just bizarre. And here's some more information about the NASDAQ as it's been improving here. This is the NASDAQ as we can see. You can see what is this? This is, I'm not sure what this specific one is, but as you can see, maybe this is the advanced decline, I'm not sure. You can see that it's having lower highs as the market is making higher highs. So this is sort of detached as well, which is usually not a good sign, as you can obviously see. The relentless crawl to new highs on the index shows a correction underneath, with NIMO hitting below -50, while SPX closed the week on a new high, with equal weight deteriorating and volume entirely collapsing. You can see here below -50. This is starting to decline as it starts to continue to make higher highs, but it's certainly topping, it would look like. Anyway, we'll see what happens. It's all tech and select tech at that, as investors are relentlessly piling into the QQQ, which is the NASDAQ index, an ETF that has a 56% market cap weighting exposed to just 10 stocks. The market is weak underneath and is more reflective of the reality that 7 stocks and relentless artificial liquidity are masking. You can see here the continued unemployment claims, or total is 28 million. The economy is far from recovered, yet markets are now trading at an all-time high of 179% market cap to GDP. The potential fuel of shorts has all but disappeared. This is the market cap, Wilshire market cap to GDP, the Buffett number, if you will, the Buffett indicator. It's never been this high. It's just outrageously overpriced. Another reason it's in bubble territory. The most valued market in history, everybody long in the shorts are gone. You can see here the short interest as a percentage of market cap has not been this low. I mean, look at this in 2009, right, where we had the other financial crisis. But look at this, since basically 2004, it's never been this low. Then next week, Jay Powell, who is personally killing it in this market, will speak at Jackson Hole. This is interesting. If he has any sense of the enormity of the distortions created, he'll aim to softly try to ease participants off of the dangerous chase into tech stocks for fear that a bursting bubble will cause more damage down the road. But that would require him to not only have recognition or cognition of the distortions created, but also take some pain in his personal ETF portfolio. The obvious conflict of interest appears to be a taboo in the financial media for some reason, and I agree. Nobody's asking these hard questions. But then again, of course, it's because all these Congress members are millionaires, multimillionaires, by and large. Nancy Pelosi, for example, I think is worth 17 million or something. Mr. Powell, how much money have you personally made this year as a result of the liquidity injections you have implemented? In light of these amounts, while over 28 million Americans are still claiming unemployment benefits, how can you claim the Fed does not contribute to wealth inequality? Let him go on record. Exactly. He has a link to direct ETF holdings via the US Office of Government Ethics, and he shows you here, imagine being in charge of deciding unlimited QE while holding this long index portfolio and then saying the Fed does not increase wealth inequality. Let's take a look at this. This is basically Jerome Powell's ETF holdings. So here you can see it. You can see the value. Large numbers, $1 million, hundreds of thousands, $1 million, 5 million, another million, 5 million, 500,000 up to. So he is generally considered to be worth, I think, anywhere between 17 and 20 million, something like that. Or excuse me, 17 and 50 million, I think. The larger market is struggling, correcting even as the rotation trade once again was left in the dust of another vertical chase into key tech stocks, which are now historically overvalued, technically extremely stretched, and at ever higher risk of a violent technical reversion. One can only hope. I just find this whole thing is a debacle, a farce, just a ridiculous amount of nonsense that people are tolerating, and really is astonishing as well. But I guess not enough people have really hit rock bottom, have not been unemployed, and perhaps people are not aware of really what's going on behind the smoke and mirrors, right? Who the puppet masters are holding up the puppet strings. Anyway, there you have it. Okay, folks, let's take a look at gold and silver and cryptocurrencies before we go into our online oracle. So we didn't look at gold, but gold for the last 5 days, the previous week, lost about 0.25%, 26 basis points. So that's not too bad. I thought it was worse than that, but there you go. And then, of course, year to date is still up around almost 27%. And here's silver. Silver, incidentally, interestingly, is still up from the previous week by about 59 basis points, almost 0.6%. So that's interesting. Silver maintained its lead, at least its positivity, whereas gold didn't. And of course, year to date, it's been doing better than gold at almost 50%. All right, on to cryptocurrencies. Okay, a little bit of a green day. We haven't seen that in some days, I think. Here we are at 374 billion roughly market cap, 5859 coins. And again, even though it's up green a little bit, you can see most of the 24 hours has been a bit in the red. Bitcoin, Ethereum, both in the red. XRP up 0.5%. Many of the other coins, Litecoin, Bitcoin Cash down 1% or so. Polkadot down. Starting to come down a little bit anyway. When it gets back down to about this level, I might investigate. We'll see. Currently, I'm just putting my money into Bitcoin because I read that terrific article on Medium I shared with you yesterday. I really encourage you to look at that again. So here we have Binance down, Stellar up just a smidge, and here's a lot of the other coins. So a bit of a mixed bag looks like to me. Even though the market generally is up 0.3%, it's probably some of these smaller altcoins bringing the totals up, I would imagine. Okay, onto the online oracle for today's most pressing question. We've been talking about Jerome Powell and the Fedsters, banksters, and all of those folks, and a lot of people continue to believe that they are fully cognizant of the fact that they're creating the worst wealth inequality in history, especially in the United States. And so the question is, does he appear to know it? And of course, he's denied all of this in any of the hearings that we've heard of. But I think he probably does know it. So my question to the online oracle is, do you think Jerome Powell knows he's creating massive wealth inequality? And of course he does. Of course he knows that. I mean, he's not an idiot, obviously. It is decidedly so. So even the 8-ball economist, our trusty sidekick, believes that Jerome Powell knows exactly what he's doing, which makes him complicit with the rest of the other gangsters, right? So there you have it, folks. We live in interesting times. We can do what we can do, which for me is paying down debt, trying to squirrel away some savings so that when the real crash comes or the real opportunities present themselves, then I'll be able to make use of that in my own small way, hopefully. In the meantime, I'm putting my money in Bitcoin. None of this is financial advice, of course. Thanks so much for joining me. I appreciate you, and comments down below. Remember to be kind out there, stay healthy, pay down debt, and squirrel away some savings. And of course, remember, above all else, dumb sparrow, sparrow.